Yo guys, back with another video yet again. Pumping out videos. I'm just gonna be pumping out videos today, guys, for y'all. Um, so today I'm essentially gonna talk about how I know when to not trade gold and how I know when to trade gold. So first, in this video, I always want to give a quick disclaimer. This is not financial advice. I'm just showing you how I personally trade and read price action. First, if there's no clear bias on the daily, on the 4 hour, and on the hourly time frames, I am not taking trade today. Friday, we were just selling off, selling. We had no market structure on the daily time frame. We were just consolidating. The price is just sitting in the middle of a range. I just don't give a fuck. We were just consolidating, and then we finally took out these lows, which could be a good movement for actually next week, where we could see a nice rebalance into that buy side liquidity, right? We have so much buy side liquidity, but we also have a ton of sell side liquidity. But the thing is with gold is we don't really hunt sell side liquidity as much because gold is an asset that will just keep rising, right? Will just keep rising. No matter how much we fall, we will eventually stay on top. So if I don't have a clear bias, so if I don't see anything, let's go to the 4 hour time frame. If I don't see any clear biases, like I guess Friday I could have seen, and if we did inverses for value gap, I could have took for shorts. I just went to the market too early. This closed around like this opens at 6 and closes at 10, so we closed all the way down here, right? So I just didn't, after sweeping this lows, I just didn't want to take a trade. It was too late. We did inverse this for value gap, right? We did inverse and we did retest into it, so that could be another confirmation. But like I said, I just want to see more and more confluences up to why I can either sell or short. Another reason is where if price is just chopping up and down with no clear displacement on the lower time frames, such as the hourly, previously like this, especially on the 5 minute, if we're just consolidating, um, don't want to see any kind of move here. We were okay, but just like right here, if you're just seeing this kind of market structure, you just don't want to take a trade today, right? We had crazy news previously. Let's go to the Forex Factory so I can show you what I'm talking about. But let's go to yesterday, Friday. So we had 5 red news folders on the span from 8 a.m. to 9 a.m. So I definitely didn't want to take a trade because they had unemployment claims, non-farm employment changes, hourly earnings, and unemployment rates. So those are red news folders that you do want to look out for. Essentially, they're high impact news, so gold can see both sides during news, and if you're not careful, you can get wicked up before the actual move happens. Like for example, right here, most traders they would consider this as their manipulation move, right? And we just want to make sure that we get a clean break a structure to the downside before we actually kind of take our entry. So yeah, easy. You could have took shorts 100% Friday. I just didn't want to because we were just manipulating, and I really don't want to trade on news as well. So I just kind of just sit back, sit back and relax. Don't. I'd rather like not. I'd rather just not take a trade than lose a trade. And another reason that I would not like to trade is, especially during gold, is when the setup or your entry is late. So a late entry means you are gonna have a larger stop loss than normal. Your take profit is gonna be much shorter. Your profit overall for the day is gonna be less. If you do get taken out, your loss for the day is gonna be more. So you definitely don't want to take a late entry. And what you really want to do if you want to avoid late entries is you want to wait for a retest or a pullback of some sort. This could be into an IFVG. This could be into an order block. This could be into a demand zone. This could be into an FVG. You just want to wait for some sort of retracement, and we want to see good rejection off the retracement to further increase our discretion or our confluences, right? So you want to wait for that kind of further confirmation. Like all I think about in the markets is confirmation. I want I don't want no B plus setup. I don't want no C plus setup. I don't want no A minus setup. I want my A plus setup to play out. And if my A plus setup is not playing out, I don't want to take the fucking trade. Because at the end of the day, the moment you break your rules, the moment you step out of line is the moment you're gonna lose all your fucking progress. And that's where you become unprofitable. So I always want to look for that A plus setup before actually looking to take an entry on either the 5 minute, which I'm on right now, or the 1 minute. A good idea with a bad entry can still be a bad trade. What this means is you can have good A plus setup. You can have your A plus setup play out. You can be so for sure that we're gonna be selling off today, which was last Friday, right? Or the previous Friday. Excuse me. And you can have that A plus setup. You can be so confident in your model that where where you can have a late entry due to fear of getting stopped out, due to not really getting good analysis of your market. You can have these late entries. And even with these late entries, let's say you do end up taking profit, you're just going to keep taking those late entries. And after taking these late entries on and on again, you're going to end up a bad risk reward ratio, right? And that's my next reason, having a bad risk to reward ratio. If my stop loss is too big or my target is way too close, I don't take the trade, right? At the end of the day, we're not only trading to see us taking profit, but we're also wanting to build that discipline in the markets, right? So if I'm risking, let's say, $100 to maybe make $50, I don't want to take that trade. That trade is it's just not worth it for me because at the end of the day, even if that trade smacks, I only made half of what I risked, and even if that trade loses, I just lost $100. You want to have a positive risk to reward ratio rather than having a negative one because a negative one, you're obviously just going to you're going to lose more money than you intended, and you're going to make less money than you intended. It just doesn't make sense. Okay. And the next step is to what do you do instead? What do you do when you can't trade? This is a big thing. You should screenshot, you should just analyze, you should forward test. That's the main goal. If you're not taking a trade, at least let your forward test play out. And what forward testing is where the price is moving live price action. Let's say I want to forward test. Okay, let's say I'm in this is a position of where price is, and let's say I think I did my analysis of the market, and I think that the market is gonna boom fire. Okay, and I'm gonna put my stop loss at these highs. I'm gonna just let this trade play out while looking at it, while just observing it while I'm in drawdown. You're not putting any money into it. You're not putting any orders. You are just forward testing. You are just seeing how the market wants to move. You want to screenshot your optimal entry that you would have taken, and you want to explain what happened in your journal or just you reviewing it. You want to review what price did because that's what separates real traders from the obviously gurus who just sell a course. I'm not here to teach you how to sell a course. I'm here to teach you how to make money. And if you're not here for that, if you just can't put in that effort, you should just click off this video because it's not meant for you. Because I am trying to teach an income that will set you for the rest of your life, right? So you definitely want to just journal, forward test, screenshot setups, and just review what price did overall for that day. You want to come back to your journal, go back to your journal, review what happened in the last week. How could you have improved? Did you win any trades? If you did, how could you have done them better? If you lost any trades, how could you have avoided this loss or potentially turn this loss into a win? Okay, so that makes my final summary for this video is don't trade when there's no buyers. Price is choppy, news is too close, the setup is late, or your RR is horrible. And the hard part about trading is having that discipline to not take the trade. And it's just all about being in control when you're trading. You're not letting your emotions come in, and you're not letting your feelings get in the way, stuff like that. Comment everyone. I want everyone to comment daily bias, and I'll make a video about daily bias with y'all. How do I for gold especially because I know a lot of people out there who are struggling with gold. But comment daily bias, and I'll hook you guys up with a daily bias video. But that's it for me today. I appreciate you guys for watching me. Um, have a good day. Join the Discord. Like and sub. Peace.